Ladies and gentlemen, my great thanks that you joined this local final of the CFA Research Challenge. My name is Krzysztof Jajuga, and I am the president of CFA Society Poland. I have been organizing this together with my colleagues from my office, Magda Fackie-Pładze, Jakub Jański, and Asia Dysput. And then I've been doing this is already 13 local final. Basically, the CFA Research Challenge is the most prestigious financial challenge for students all over the world. And actually, this is the 16th edition. We started our participation as Poland and also the neighboring regions, because basically we also cover Poland, Lithuania, Latvia. We started, this is our 13th time. So thank you for joining us. And this is the time when we should start. First of all, my great welcome goes to the company who is now, this edition is now, company that's being researched, and you already provided, students provided very nice reports about this. And I see there is a Karolina Żońca-Bajorek in the room here. I can see you.
Hello.
There is Joanna also Paczkowska-Tatomir from Asseco. If there's anybody else, I mean, I don't see everybody on the screen, but thank you for being the company, and my congratulations also goes because I understand that not very many weeks ago, last month, actually we have March, so that was in January, you got special prize as an international champion for investments for large companies. So great congratulations. And I think that was a nice choice that we could have this competition, having you as a research company. So I'm not sure whether there is Artur Wiza, I think, also in our room. Yes, so also welcome from Asseco, Vice President, and Carolina is also Vice President of the company. So thank you for joining us.
Hello.
Our pleasure,
everyone.
And I also welcome, he's not yet in the room, but usually is our big friend, Tomek Ochrymowicz from Deloitte. I'm not sure, Tomek is not yet here, but they are always supporting us, Deloitte, together with the other companies. You will see this in a moment, but maybe since there are people from Asseco, so I would like to give the floor or maybe the screen, actually, for a short while. So if anybody of you would like to say a few words now, it would be very nice from Asseco.
Maybe I will start, and then I should leave a little bit early because there are different things that we have to do right now.
Yeah.
But I would like to thank you for all people that participated in this project. It's very important. We know that today the life is very difficult and we have really big problems elsewhere. And we say we must run our company as normal, because we are a provider of the systems for all the major companies like banks, like government, like telcos, like energy sector. And it's important how people are working 24 hours a day to deliver, to safely run the country. But on the other hand, a lot of our people engage in supporting people that needs help from us right now. And till now, in this week, we provided 2 million Polish zloty to all the people that need help. And we also provide the support with our work with all the organizations that are working with us. And that is part that is beside what we do in terms of the business we have to run. And therefore, I would like to thank you to focus on what you do, because we have to look into future, and your work is very important, and your everything what you done with this project is also important. And go ahead, because there are other people that focus on other things, and of course, when you will be free and you will have all the additional time, support those people and help everything that needs right now to have the help from us, because they are our neighbors, and we need to work with them very closely. Therefore I'm giving back to Professor, and take care. and good for all work you done, because we have also to look into the future. Thank you.
Okay, thank you very much. Thank you very much. So thank you, company, for joining us here. And also my great thanks and just welcome to our judges for today. As you know, the teams will be judged. There are four judges here. And Agnieszka Wysocka, Agnieszka, welcome to our competition. Agnieszka is director in the accounting department in Bank Gospodarstwa Krajowego. Also, I would like to thank Bank Gospodarstwa Krajowego for all support that you gave us during also previous competitions. Always we were together and supporting also CFA Society Poland. Thank you very much. I'm not sure, Piotr Żochowski probably is not yet in the room, although I don't see him on the list.
Yes, I don't see Piotr also, and I cannot reach him by his mobile. So
Okay.
actually, well, I don't know what happened, as last Friday he confirmed
maybe
that.
this is the current situation, and also Piotr is
might be
president of the management board of PKO TFI, PKO TFI. And I know that, I also just got the message that next week, there was supposed to be a seminar about banking, etc. And they canceled this not canceled, but postponed this simply. So I understand that there are problems also with the current situation for banking industry. To some extent, they have to be very careful. My great welcome goes to Piotr Sierazan. I see Piotr on the screen. Piotr is the member and vice president of management board of CFA Society Poland. Also great experience in the financial market. And Aleksander Mokrzycki, I know Aleksander is also in the room, so welcome, Aleksander. Aleksander is also vice president of CFA Society Poland, so these are judges. Thank you for joining us, and there's hard work coming. And also I would like to welcome students. I cannot, unfortunately, at this moment, I cannot give the names of universities because from very beginning of these competitions, everything is anonymous, so you are letters. Now at this moment, there's Team A, Team D, Team F, Team G, and Team I. So congratulations, the competition was very tough.
Congratulations, the competition was very tough.
Oh, something wrong. So we had big problems with selecting the best teams. You are the best teams because, as you know, grading in this competition is based on 50% on reports, and reports were delivered, and there were judges. Graders, I can see some of them. Małgorzata is, for example, in the room. Rafał is in the room. Thank you very much, and some other people. But 50% is the presentation today. So we could select only the best teams for the presentation, 5 best teams, and then.
But on the other hand, I agree with Mike that
I think that somebody has mic turned on, and this is not the way how it should be done for online events, right? Okay, now it's okay. Welcome here, and congratulations on your big achievement now. Until now, and I hope that things will be the best for you also at the end of today's competition. And then I will announce the names of universities finally, but not at this moment yet. So thank you very much. And then I'm not sure whether Tomek Ochrymowicz is with us already or not yet, because Tomek usually says some nice words, but I don't see Tomek. So now I can jump into a short presentation where there is description what is going to happen today. The only thing what I should do, I should share the screen. Let me see. Okay. I guess this will be, give me 10 seconds, just 10 seconds, because right. Okay, here we go. I think that will be this one. So this is my presentation. So I'm going to share screen now, and hopefully you will see this. Right, this is the one. Okay, I think that you see now the presentation. It's not very long, but it describes, also the rules of today, etc., etc. Okay. Our sponsors, I mentioned already Deloitte. I mentioned strategic partner over many years and Bank Gospodarstwa Krajowego. There is also traditionally Warsaw Stock Exchange as our partner here. And in fact, Warsaw Stock Exchange was the subject company in the edition number 2 in this challenge, which was in 2011 or something like this, right? And then also Dorsum, they are with us. This is investment software company located in Budapest, but having a lot of contacts with the other countries. So thank you for support in this competition. Subject company, you know, Asseco, again, big thanks. And now there was welcome remarks, there will be rule reviews, and then there will be team presentations. I already said that we decided to have a random draw of the order of how the teams will be presenting. First will be team F, then team A, team G, team I, and team D. Approximate time. Of course, the presentation is 10 minutes, as you know, plus another 10 minutes for question and answer. So roughly about 20 minutes. And of course, during the presentation of team, each participant except for the team, but the other teams should leave the room. The judges will stay here, and of course our guests, but not the teams, not the other teams. So they have to be out of the room during the presentation of the other teams, right? So, and then there will be short, I mean, maybe not short, but you know, like half an hour at most, I think, intermission where we judges, we will deliberate about the score. The score will be added to the score from your reports because already that's what we know, but we need to get another 50% of points from your presentation, and there will be announcement of winners. So this is the program for today. You already know our judges, okay? The rules are simple, 5 teams, okay? You were the best, of course. A recommendation, you give recommendation Asseco, of course, 10 minutes time limit for presentation, 10-minute time limit for question and answer. And as I said, winners will be decided by combination from report scores and tonight's presentations. 50-50, so there will 50%, you already got 50% of points, maybe not maximum 50, but you had very nice scores from the report. Okay. This will be the sheet of the scoring for our judges. They know it, of course. So you see there are different criteria: financial analysis, valuation, ESG, presentation, questions and answers, team involvement in materials. Materials were already delivered to our judges. You know, your presentation that you prepared. Possibly in last 1 or 2 days, you could make a slight adjustment if something happened important, and that's it. That's it. That would be scoring or presentation. There's a prize. There is a prize for first place 10,000, for second 6,000, and for third 4,000 zloty. Thanks to our sponsors. And then finally, the winning team will go for sub-regional competitions, and then for regional, and for hopefully for global final. I wish that one of the teams that are in the room today, one of these 5 teams, will enter even global final, which was previously planned to be in New York and in the stationary form, face-to-face. But unfortunately, as you know, it's the second, is it the second or the third time? Yes, I think it's the third time when these finals are organized online. Oh, sorry. So you have these sub-regions. We are in the EMEA sub-regions, and our sub-region is Eastern Europe. And the winner of this, or several teams will go to the regional final, first semi-final, then final, and then to possibly to global final, which I strongly wish. Okay, so this is the time schedule. Of course, the winning team will go for the regional semi-finals, which will be in April, and then regional finals and global final at the same day. In the morning, there will be regional finals for 3 regions: EMEA, Europe, Middle East, and Africa, then Americas, and then Asia Pacific. And the best, usually this will be 5 teams. The best from all these regions will go for global final, which will be in the evening. So this is the idea, and again, good luck. And I think that we can simply now move to our competition. So I close the presentation here, and according to what you saw in the schedule, we will start with the team F. So Team F will stay in the room. The other teams will leave the room, and also guests will stay, of course, our guests, Asseco and the judges and panelists, etc., will stay in the room. And okay, that's it. So we will wait for the composition of the room, which is only Team F. Yes, I see 1, 2, 3, 4 people, 5. Yes, okay, 5 people. Just check it, because faculty of Team F can stay, of course, and then mentor of Team F can stay. Also, the faculties and mentors of the teams that didn't get into final can stay here, but not people who are related to the teams that are competing here. Usually when we did it offline, this was that they had to leave the room, and this was Warsaw Stock Exchange, they have to go to some other room and wait until they could present. So, okay. So I hope that we are ready. Is it so? I think I may ask only Jakub, who is looking at the composition of the room. If Jakub says that everything is okay.
I still see 2 members of team A, so I will contact with a person that they should leave.
Okay.
So
Yeah,
please
there are 2 members of the A team.
Yes.
A team, you will present this as the second one, right? So you have to leave now, because these are the rules.
Okay, I will contact.
Okay. So I think, and also one thing is that you have 10 minutes for presentation, and 1 minute before you will get a warning sign that this is almost getting to the end, and the same will be true for Q&A. So without undue delay, I think we can start. Magda will take care of time.
Yes,
So
I will let
Magda,
you know 1 minute before the end of presentation.
You will get short message 1 minute before the end, and if we can
No, I
start.
will just tell in here that 1 minute left.
Okay, good.
Okay.
So if you are ready, Team F, if you are ready, you will tell, and the time starts when you tell start. Okay, ready? Okay, so we can start. Good luck.
Asseco Poland SA is a Poland-based information technology company which provides enterprise resource planning solutions, business intelligence, cloud security provision, and proprietary software services. We are presenting Asseco Group via buy recommendation with a 12-month target price of 138 Poland zloty and 60 cents, which represents 85% upside from Friday closing price. The evaluation of Asseco Group is based on DCF evaluation and supported by relative valuation and preceding transactions. We strongly believe that Asseco is a buy because of 3 following points. Asseco Poland's merger and acquisition strategy, referred to as federation within the company, which unlocks previously untapped markets for further expansion. Company aligns with a positive outlook for IT service industry growth, and global automation and digitalization combined with Asseco competence and experience bring up a company in a high demand environment.
Switching to revenues, these are very diversified for Asseco Poland. Therefore, revenue streams are seen as reliable and secure. Secondly, in the decomposition of revenues by services, we see a strong reliance on proprietary software, and we do recognize this as a strength. Why? Because company limits its exposure on external products. Finally, according to our analysis, the nature of services implies that company relies on long-term contract, and in this way, it assures a continuous revenue stream. Moving on to expenses, we do see a shortcoming there, as labor expenses relate to 69% of total expenses. Why we would see this as a threat? Well, because IT service market faces scarcity of labor supply, according both to Eurostat and Poland statistics. Additionally, inflationary pressures and regulatory changes in key markets would contribute to increase in labor costs, and those would make a dampening effect on profitability. On the other hand, company benefits from a firm reputation, which is indicated by their pricing strategy. Company prices its services relatively higher due to incorporation of all the risks related to that service. However, company is able to sustain and even increase a customer base. We assume that clients are willing to accept higher prices for a qualitative service in return, what is also backed up with a high demand for IT services.
Asseco cares more than the most of IT industry. We believe that zero environmental penalties, 40% of women developers and diverse shareholders, these are the key points why we think it shows outstanding care to pursue social values. And this, exactly this in the near future, should transform in a stronger brand and reputation. Did you know that in 2020, Asseco Poland stood out from the crowd with 55 ESG score, while the industry median was merely 37. To keep growing the score in the near future, Asseco, we believe, must innovate for environment, keep their motivation for employees, and increase efficiency of anti-corruption policies.
We project Asseco's revenue to grow at CAGR of 8.8% over the next 4 years. Growth will be driven by Asseco's successful M&A strategy of acquiring minority interests of innovative market players, Asseco's established market position that lets the company to offer their services at competitive prices, Asseco's proven track record and know-how that allows the company to provide high quality services to their customers, and finally, global digitalization that immensely drives the overall IT industry growth. As the world shifts towards the digital economy, Asseco is in a unique position to reap its benefits, increasing their average EBITDA margin to 14.7% for the forecasted period. This is mainly driven by decelerating M&A activity, decreasing costs, and substantial market share. As a result, reducing the pressure on OpEx. Historically, Asseco was able to obtain higher profitability margins compared with peers, and we foresee this trend to continue. We forecast the CapEx to grow as the company continues to expand, utilizing M&A and organic growth channels. However, M&A CapEx is going to decrease to a 4 years average of 53% for the forecasted period. Asseco's M&A strategy focuses on leaving majority stakes to local managers. As a result, yielding increased motivation, and on the balance sheet, those minority interests will be seen as long-term investments and goodwill. We believe Asseco is going to continue acquiring companies, yet at a slower pace, as the market is getting overcrowded, presenting higher premiums for acquisition targets. We forecast Asseco to increase its profitability to around 13%, mainly driven by decreasing costs, increased leverage, and decelerating acquisitions. Currently, Asseco's under-leveraged capital structure provides the opportunity for higher shareholder returns by delivering higher key margins, larger earnings per share, and potential for strategic growth.
To value the company, we use 3 methodologies: discounted cash flow model, relative valuation, and precedent transaction analysis. To arrive at our final price, we put 80% weight on the DCF because we believe it best reflects company's nature and its upcoming future. For the remainder 20%, we use target price achieved via relative valuation. We assign no weight to precedent transaction analysis because we believe it results in too high of valuation. And that can be explained in 2 key reasons. First, usually in M&A, a premium is paid over obtaining controlling stake. Secondly, we were only able to obtain multiples which were calculated on reported figures, meaning not including synergies that are specific to both buyer and seller in the transactions. Thus, we believe that reported multiples might be inflated. After calculating with the weights, our target price blended valuation, we come to blended valuation of 138.61 zloty per share. As for DCF, we project for 4 years free cash flows to the firm. And for the terminal value, we select terminal nominal growth rate of 3%, which is supported by the gross GDP long-term growth rate by country, which are in key Asseco Group markets. To arrive at the present value of our cash flows, we use 7% weighted average cost of capital. We test both of these inputs for movements up and down, and we see that even in the worst case scenario, the upside powder is still here. After adding all the details, we come to the DCF target price of 136.42 zloty per share. More, we checked two more scenarios. If the sales are going to outperform or underperform our base case scenario of CAGR projected 8.8% during our projected period. In this case, even in the worst case scenario, the upside is still there. We also check salary level as of revenues, which we project to be around the same during our projection period, and the target price in worst case scenario is still there. To support our DCF, we used relative valuation, in which we selected 12 peers that are in IT sector and also operate in key Asseco Group markets. We exclude 5 of them because we believe they have different models from what Asseco does. For the selected 7 comparables, we inspect 2021 and 2022, 5 different multiples.
Main risk we see here for Asseco is increasing labor costs, and this one is with high probability and even larger impact. To avoid any major surprises for Asseco in the future, we believe the company should increase its outsourcing to reduce the dependency, while at the same time training the employees and motivating the ones to keep them at Asseco. If this labor cost risk materializes, this could lead to larger OPEX, which ultimately leads to lower profitability. And of course, it decreases the amount of dividends paid, which makes this a less attractive investment option. The second risk we identify is the regulator scrutiny, to be exact, the Polish order. So in order to avoid this risk, we think that Asseco should utilize relief packages under this regulation, as well as at the same time pursuing innovative and automated decisions, while at the same time making quick decisions, because this is a new regulation and it could be minimize the damages. So valuation impact,
1 minute left.
in our opinion, will be the pressure on OPEX will turn on EBITDA and negatively affect our free cash flows, devaluing the company. Overall, strong financials, sustainable business model, rigid competitive position, and our deep research suggest a buy recommendation for Asseco Group with a target price of 138.6 Polish zlotys, representing 85% upside. We are very happy to take your questions right now.
Thank you very much for your presentation. And now we open the floor for questions and then answers. So I ask judges to ask questions, and you answer each question.
So I may start. So if you could answer the question regarding your last slide regarding the valuation versus the market value. We hear just a huge difference between your valuation and the market valuation, and I would like to know the reasons behind that difference.
Thank you for your question. So we believe that there are several things that market does not incorporate. And one is being bearish on the overall business models of Asseco, which is federation, which we believe is a great model. And if, of course, it possesses risk of having this M&A Frankenstein, but we believe Asseco has been great in running such business for a long time. So we believe, one, it's being bearish on the federation model. And secondly, overstating that we believe that the market might be overstating the company is reaching its maturity in its company cycle.
So maybe additional question to that, because you said that you are bullish, and it seems like you are right in terms of your valuation versus the market price. But why is your nominal growth rate so low, 3% versus peers, which is 5.5 as I remember?
I'm sorry, could you repeat the question?
My question is with regards to nominal growth rate, which you have used in the valuation which is at the very low level, 3%, which is much below the growth rate of peers, which is 5.5%. So So the question is why the nominal growth rate, nominal, it's not real, it is so low. 3%
Yeah, so
assume.
all right, thank you. So we looked at real GDP, nominal GDP long-term growth rates, which information was obtained through Reuters Refinitiv Econ, and none of them were higher than 3.5%. Thus, we decided qualitatively to select nominal growth rate, terminal growth rate of 3%.
Okay, thank you.
Okay, any other questions, dear jury?
Yes, of course. Actually, one of the questions I wanted to ask was already asked by Alec. My first question would be, have you evaluated the management board of the company, and what do you think of current management board of the analyzed company?
I can take that question. Yes, we had analyzed that, and we believe that it is quite competitive and it possesses required knowledge to operate the company. However, the only shortcoming we would recognize is that board members do not hold shares. So probably maximizing shareholders' value within the company could be an issue. However, it's only the only shortcoming we would see. Major one, I would say.
Okay, but your general opinion about the management is
that it's qualitative, it's competitive, and possesses the great knowledge to operate the company. So we would say that management board is very good.
Thank you. Regarding the ESG slide, you mentioned in one line a risk. Actually, it was in line with the percent of female employees. At the same line, you also mentioned a risk of losing key employees. My question is, are these two related to each other, and how do you see the risk relating key employees versus ESG?
We see versus ESG as a social issue over here for a company. We saw a transformation to online, and companies got competitive in their hiring. And we believe if you do not use your resources to keep them happy, you might lose your key talent. And as the labor costs are already rising, that could be very impactful for Asseco. Did I answer your question?
So I understand this risk is just, well, it's just on the same slide with ESG, doesn't have anything to do with ESG, right?
I believe it does, but you might disagree with this.
Well, I would like to hear your opinion.
I think it is a social issue, and losing key employees relates to various, charity events to keeping them happy. So it is a social issue because I believe Asseco reported that majority of their employees have participated in various charities at least once a year. And we believe this is a social issue. If you do not pursue those, you are, facing losing key employees, which I said is quite crucial at the labor market there is now for IT specialists.
Okay, but I guess it's not a specific issue regarding the company. It's probably the general issue. But okay, thank you very much.
Thank you very much. Okay.
And may I have a question also about the best and worst and scenario? There is a slide showing a big impact actually for the price of the labor cost. Could you explain it more, how it translates into the valuation, especially with regard to 50% or to 48% decrease of the costs? If the cost of labor relate to 50 or 48% of salaries are of revenues. This seems to have a very high impact on DCF target price in best case scenario and worst case scenario. Did you do this analysis? How did you do it?
So first of all, I think it's important to mention that in the slide it's an error. So the 48 should be swapped with 50%.
Okay.
Generally
different.
Yeah, generally what we did, if the salaries increase, meaning OPEX increases, EBITDA will decrease, and that will translate into the free cash flows to the firm, meaning that the DCF achieved from the target price will be lower.
Okay, so yeah, so yes, that's what I noticed, and actually, so do you see a big impact on the valuation of the labor costs, and also how do you think it will be possible for Asseco to decrease the costs compared to revenues, just to have higher profitability? What they should do to obtain such a good results in the future compared to current situation?
Of course, thank you. As for the salaries, we believe that if it happens so that in the Europe, the labor costs keep increasing, in particular in Poland, we believe that company, as it is doing right now, will be able to fully, well, not maybe fully, but will be able to outsource its labor forces. And that's what they're doing right now. And in case the risks happen, they will be able to do so, as they're doing right now. Not majorly, but
Okay, thank you.
One more question regarding current situation in Ukraine and in the East generally. How would you evaluate its influence on the company situation?
I may jab a little bit on that. As long as companies' operations are segmented into banking industry, into general business, so we would see quite a significant impact on the banking. However, on the other side, we would see also a great advantage and opportunity to take for the company, because as we already know, company operates in some military segments, and probably when talking about military segments, I talk about the NATO, I talk about the Frontex, Polish military, Israeli military. So those are very in high demand currently. So I would see an opportunity for Asseco Poland to utilize that situation, as well as company operates in the cloud and security, I mean internet security. So company would actually be able to hedge the risks coming to the banking industry by switching more to other to other services they already provide.
Okay,
thank you. We ran out of time for the questions, so excuse me.
Thank you very much. Thank you very much, Team F. Thank you for your great effort. Please, stop sharing screen before you leave, and then okay. And then the next team, so I would like Team F to leave, and the next team will come, which is Team A.
Okay,
so
I'm contacting
okay,
Team
good.
A.
So should be Team A very, very soon, and we will do the same. Okay, great. Yeah, when we did this offline, it also took some time because one team should go out, go to another room, and the other team could come in meantime. And then I think that we should see very, very soon, very, very soon, team. In meantime, judges, you can already think about filling the scoring sheet a little bit, because it's just you remember what happened. After 5 teams, well, it might be hard to remember maybe about each team exactly. Okay. Here we go. I think we did Team A. Not yet, not yet. Okay, I think there's already somebody from A04.
Hello, Christoph. Hi, everyone.
Hello, there's A03 lady. Thank you very much for joining. There should be more probably, right?
We have one more, yep.
Yeah, sure. Good afternoon. That is A01, A02, A03, A04. Is
That's
that
everyone.
it, or there is
Yep.
A05 or not? 4 people?
Yeah, we are 4 people.
4 people, good. So when again, the rules are the same. You can already share the screen, and when you are ready, you just tell start, and the time counts. 10 minutes, 1 minute warning before the end, and there will be 10 minutes for Q&A. Also, it's 1 minute warning. So when you are ready, you can possibly share the screen. Just sharing screen is nothing wrong with this. And showing the first slide probably is coming, I believe, right?
Yes, it is. Candy, could you please share the screen?
Yeah. Take your time. Oh, yeah. We see the screen. So when you are ready, you just tell start, and the time counts.
Start.
Okay,
Good afternoon from Team A. We are here to present our analysis on Asseco with a buy recommendation with an updated target price of 92 PLN, representing an upside of 24%. Our target price was updated to reflect the current geopolitical situation. We believe the 6th largest producer of software in Europe and the largest supplier of modern IT solutions in Central and Eastern Europe has a great potential to soar as high as our target price in a 12-month period. The Asseco Group is a federation of companies providing complex IT solutions to major sectors of the economy, being a leader in providing IT solutions for the public sector, among others. Its business lines can be divided into proprietary software, third-party software, and hardware and infrastructure, with proprietary software being its main source of revenue. Asseco is present in 33 countries on 5 continents, having had a consolidated order backlog of over 10.8 billion PLN by the end of 2021. Our buy recommendation is based on 3 key drivers. First, the tech transition trend in the world and across different companies. Second, the middle ground between acquisition-based growth and margin levels. And finally, innovation allowing Asseco to reduce its costs. Going over the key drivers in more detail, companies and organizations across the world keep on increasing their IT spending. For instance, governments are expected to increase their IT budgets by 6.5% in 2022 alone. Acquisition-driven sales growth can be a factor limiting the level of profit margins in the short term. However, finding the middle ground between acquisition-based growth and margin upside can be seen as Asseco's strong point. Finally, Asseco Poland, a member of the Asseco Group, can be called a research and development leader, being among companies with the highest R&D spending in Poland. Higher R&D spending leads to superior technology, which leads to lower costs, allowing to allocate more for R&D. R&D can be seen as Asseco's competitive advantage.
To have the valuation of the company, we implemented 2 main approaches for valuation of the group as a whole and the valuation based on sum of the part analysis based on the company segments. For each case, we considered bear, base, and bull scenarios, and we implemented DCF valuation, comparable valuation, and MOIC analysis. The first step in our valuation was to quantify our investment thesis into financial statement projections. Having this in mind, the 5-year income statement and other financial statements were calculated. Considering a risk factor of risk-free rate of 4% with a beta of half and a cost of equity of 12.4% and a cost of debt of 3.3%, and by considering the debt to equity to reach the target value of 40%, we come up with a WACC of 9.2%. On the right side, you can see the jump in the WACC in the recent weeks due to the tensions in the area. Considering the earning from the interest minorities to be the same ratio as this year, we come up with a target price of 110 zloty from the DCF valuation of the full company, the full group. We had a little bit problems in making the comparable analysis because the business structure of Asseco is neither a full software house nor a fund. So to make a comparable analysis, we considered 3 different groups of peers based on business model, regional peers, and also the companies in IT sectors with the similar revenues and profits. A weighting factor of 50% was given to the first category and 25% to each of the second and third category. As we believe that one of the exit strategies of Asseco may be its acquisition by an international brand, we also performed a series of MOIC analysis to have its enterprise value and to recheck the correctness of our final share value. We conducted sensitivity analysis of our DCF model by changing the terminal growth rate, EBIT margin, and employee cost, and WACC values. Analyzing their impact on our buy recommendation, we come up with the result that the company valuation is sensitive to the terminal EBIT margin. Here, you can also find the results of our valuations in a football field. In our scenario analysis, we consider 3 potential bear, base, and bull scenarios based on the 3 main investment theses in our studies. Each scenario is designed, and by changing the related variables in the model, the share price for each scenario is calculated. Doing the Monte Carlo simulation by varying the terminal growth rate, WACC, and cost of goods sold, or it's better to say cost of service, we arrive at a 65% probability of reaching prices with a minimum of 10% upside.
Moving on to the non-financial analysis of the company, where we analyze the 3 main pillars for ESG analysis. We created our own model in which we have analyzed broad factors in each of the pillars like resource use and emission in environment, management and shareholders, and CSR strategy in governance, and product responsibility, community, human rights, and workforce in social. We have further selected, quantified, and analyzed 85 different factors in these categories to get a very detailed idea of ESG performance. Asseco got a score of 51.19 in 2020 with a rating of B. We analyzed the ESG performance in short and the long run by varying the pillar weights, and Asseco got the rating of B in both the durations in 2020. Want to know how we calculated the scores? Let's move on to the ESG model that we created. We first selected the peer companies of Asseco. We identified the relevant variables of the board from the broad list of variables available in Refinitiv and selected the ones relevant to the IT industry. We then assigned weights to each pillar and the primary factors in the pillars. After quantifying the data and calculating their values, we then assigned 80% of the values weight to the values we got from the data from Refinitiv on core ESG factors, and 20% weight to the sentiment analysis values we got from Google News and Refinitiv News API. We finally merged the 2 scores to get the final ESG score and assigned a rating based on the score received. Now that we have the score for Asseco, we wanted to understand, is this a good or a bad score? To do this, we ran the same analysis for its peer and compared how they scored. And we can see in the next chart that Asseco performed better in compared to some of its peers, while the scores have been increasing over time, trending to match its global peers and representing their increased dedication to sustainability of the company. In the next slide, you can see the weights of the pillars in short and long run with the scores Asseco got over time. We're given the highest weight to the governance pillar in the short run as well as the long run, as we believe that the company is more sustainable in the short run if they have good governance, and other pillars really start to show the effects in sustainability as we move on in time. We see that Asseco is performing comparable to the average of its global peer in government player, while improving to compete its global peers in the other 2 pillars. Some point of concern is the high concentration of the shareholding by the institutional and individual owners. Low female participation in the board, very long average tenure of the board members, which is good, bringing in experience and commitment, but we believe that there should be elections at least every 2 to 3 years, so that we have new perspective into the board and we keep the board very competitive. Finally, we have not seen a lot of initiatives by the company to use this renewable energy, which could potentially reduce the pollution further, helping make the world a better place to live. Some areas of strength for Asseco is that it has very experienced board and have good management policies for the government. It has focused a lot in increasing energy efficiency, resource reduction, and waste management. In 2022 alone, the company's total electricity consumption reduced by 4%. The use of fuel in vehicles reduced by 43%, the water consumption reduced by 30%, and the total emission also reduced significantly. It also had a lot of CSR initiatives like We Bring Help, Our Town, We Will Win, etc., to help the community and support its employee. With all these facts presented, we believe that Asseco is already a very sustainable company and will continue to improve on the sustainability aspects in the coming future.
Considering the risk factors of Asseco, we come up with 2 main risks in the business. One of them was the business disruption that could happen, in the business, and the other one was rapidly changing business environments. So these are the main ones, but having the most influence on the business. So they have set up some mitigation strategies for each of the cases that we talked about. The upholding potential for clientele, focusing on prop software solutions as a revenue source, acquisition of smaller competitions to route internally into the global market, and development and deployment of new products and services are practically the mitigation strategies that they have. Based on the three thesis analysis, the valuations, ESG, risk analysis, we come up here with the buy recommendation for Asseco with a price of 92 PLN. Thank you for your considerations. We are waiting for your questions.
Okay, thank you very much for your presentation. And now I open the floor for questions and answers. So dear jury, floor is yours.
Okay, so I can start again with the questions. So if you could, maybe I missed that element, but if you could tell us, how did you came out with the 92 price, 92 zlotys price versus your DCF 110, as I remember, valuation, and 86 peers valuation. That's the first part. And the second, just if you could answer why we could see such a huge upside versus the market price.
Okay. Regarding to the first question of yours, we come up with two different prices. The first one was 92, the second one was 97. This 97 was at the time that we've been preparing the report. Because of the tensions in the market, we come up with the 92. I will tell you exactly how we come up with that, but the main reason for the correction in the presentation is that the recent tensions that we believe that will increase the, the VAC value and the risk that, comes with that. The second point, regarding to the way that we come up with the value, we practically considered the average of the whole, analysis that we had in the, if Candy, you can show the football field analysis, we could come up with a practically the here, yeah, with the practically enterprise value of 29.833, and it is practically the value that we come up with, and this is, if you convert it or translate it into the share price, the value would be something like 97, but we corrected it because of the recent changes in the political and geopolitical situations to 92. How? Based on our, in fact, sensitivity analysis. We made an interpolation based on the practically the VAC, and we come up with the VAC of 9.6 right now. And with that value, the amount of the total price would be 92. This is the answer to the first question of yours. And what was the second question?
The second question was just why we can see such a huge 24% upside of your price versus the market.
Okay, there are different reasons. First of all, one of the main reasons was that, after the COVID era, after the finish of the COVID era, we had a sell-off in the market. You can see even, about 6 months ago, the price of the market, the price of the same stock was something like 110, and right now it is 74. So the first thing is that one, and the second thing is that, in the recent weeks, because of the increase in the VAC rate, we believe the market price, goes below the value that, it was before. And right now it is at the value of 74. These are the two main, reasons that, market, underappreciates this, valuable stock.
So adding to the point, we also believe that being a market leader in software industry, Asseco has a lot of potential to grow in the coming times with its latest technology, with its investment in innovation and R&D, and also with its initiations like having its own data centers and providing proprietary as well as services, proprietary software products as well as services. So we see that with all these and the increasing demand for IT services and products in the recent markets, especially after COVID-19, we have seen a lot of increased demand for IT products. We see a huge potential for Asseco to grow in this space, and hence we think that the 20 to 4% upside is quite justified.
Okay, thank you.
Thank you for the question.
Okay, what's your opinion on COVID-19 impact on historical data, which you use for DCF method for further forecast, and either it was positive or negative for those data, and how COVID-19 pandemic may drive revenues and costs in the future forecast?
Okay.
Did you excluded it as one-off events, or included, or did you do anything with this?
I will take the answer for this question. I will take this question. The first thing is that, like many other IT, industries, at this time, the demand for the IT services, especially prop services, prop software development services, was increased. So this was the first thing that we see. And it is not only in this company, we see in a lot of different businesses, similar businesses. We see in different, even like the SAP, like practically Constellation. These are the companies which are the peers to Asseco. They have similar business models, and we see the same structure there. So COVID had a temporary effect in one point. The temporary effect was that it made an sudden increase in the amount of the request or demand in the market, but it also changed the culture. We believe that after the COVID era, there would be a higher, knowledge in the market about the necessity for transition. So we believe that in the next year, in the coming years, based on the EIB analysis, the amount of the sales in this section will increase, and that value is something like 24%. Increase. It will be it will happen in the coming years, and this is one point. Another point that is of importance is that COVID had some influences on the macroeconomy. One of that factors was the rate of inflation. The second one was the rate of translation or exchange of zloty versus US dollar, euro, and Israeli shekel or ISL. And the company earned a good profit from this translation. Yeah. Previously, if you remember, the 1 euro was 4.2 zloty. Right now, 1 euro is something like 4.8. So this was one of the parameters that made profit for the company. The second issue that made profit is the rate of, in fact, will make some kind of profit for the company in short term, is that it helped the company to have lower salaries. We had a reduction in the salaries at the time of COVID. However, it will increase based on the EIB consensus analysis in the coming years. But we believe in a temporary period of time, they could have more, bargaining powers. I'm not talking about the next years. In the next years, they will have problems, and it is one of the main risks in the company. And in general, if I want to, tell it in short, at some period of time, it was very good for the business. However, there were some, issues and problems with the potential of the lack of liquidity for the suppliers that they had, like the case that happened in the market of Israel, that, one of the contracts that they had with the government of Israel could not be practically liquidated. So, and they did not pay for this. But in general, it was positive in short term. The company had some, mitigation processes. They made some committee for COVID to check if accounts receivables are well and everything seems to be okay. They have no problems in that regard. And we believe that in the coming years, with the changes, with the catalyst effect that COVID had on the tech transition and tech boom, we believe that it will help the companies to grow bigger. It was a lot of information, I think.
Thank you.
But I hope that it was, I could tell my point.
And hope that answered your question as well.
Okay, is there any question more?
Yes, sure.
Okay, go ahead.
you mentioned a few risk factors in your risk analysis. What you haven't mentioned, at least I haven't seen it, is actually an increase in WACC and increase in cost of debt. At the same time, it seems to be a quite important parameter in your valuation because it changes like WACC, which you assume at the level of 9.6, if I remember correctly. And if it goes only up to around 11%, your buy becomes a hold, and then probably it would become a sell. So my question is that shouldn't that be considered a risk factor? And my second question regarding the risk is what about the situation on the labor market and the risk of losing key employees?
There were 2 points. The first question that you had about the WACC is absolutely correct. The thing is that, we considered this in our report as one of the practically important conditions. And the thing is that, we also, at the time that we prepared the report, we also weighed in the influence of the geopolitical tensions and the WACC changes on the market.
We've reached 10 minutes for questions now.
We have done the sensitivity, and I should continue or not? We had the sensitivity analysis to check exactly.
I think the time is over, so we just have to finish this. So thank you.
Thank you.
Thank you, team A. Please stop sharing screen. Thank you very much. Now you will leave the room and we will ask team G. Next one is team G. So we have team F, we have team A, now it's team G coming. So
thank you very much, everyone.
Okay, thank you very much. Good luck, and we'll see each other very, very soon.
Sure.
Goodbye.
Have a good day. Bye.
So Jakub, please allow team G to come. Okay, we wait for team G. Yes, it's coming. G03, G02, G01. Great. Do we have all people from G team? 4 people, right?
5.
5. Where is the 5th one? I can't see. 1, 2, 3, 4, 5. Yes, it's coming. Number 5 is coming. Good. So good afternoon, dear team, again. And you can, as you know, the rules are, you can already share your screen, the first slide, but when you are ready, you will tell start, then 10 minutes, and you will get warning message 1 minute before, and then the same will be repeated for questions and answers, right? So 10 minutes and then 1 minute warning, etc. So if you are, we can see slides, but if you are ready, you can say start at the time starts to count.
Okay.
Okay.
Start.
Okay.
Good afternoon and welcome from Team G. In our presentation, we will expand on our buy recommendation for Asseco with a target price equal to 109 PLN and 33% upside. Being one of the largest software providers in Europe, Asseco exceeded 10 billion PLN both in sales revenues and order backlog. The group offers 3 types of products: proprietary software, third-party software, and hardware and infrastructure. Asseco operations can be narrowed to 3 main geographical segments: Poland as Asseco Poland, Europe as Asseco International, and Israel as Formula Systems. We backed our buy recommendation with 3 essential catalysts: Asseco's proficient workforce, which guarantees a high return on capital employed, broad M&A experience fortifies the market position of the group, and premium margins surpassing peers. Asseco is about people. It is plainly visible as Asseco maintains a positive staff turnover ratio in contrast to its peer group. Highly qualified employees are then able to positively impact the growth of return on capital and return on capital employed. Asseco is leading in terms of total sales of IT products in Poland and recently experienced the biggest growth out of its peers. And even though those peers have a relatively close threshold of revenues, Asseco is still able to make an exceptional net profit, being few times higher than its peers. Asseco is a pioneer in innovation. 1/5 of its employees is devoted to research and development, which made them a leader in terms of R&D spendings in Poland. Due to its broad experience in M&A, Asseco became an expert in providing banking software, as it supports over 50% of banks in Poland and Israel, and over 80% of banks in the Balkans. Moreover, despite not having the highest spendings on cloud computing compared to its peers, Asseco still experienced a greater annual shift. Asseco multiples prove the stabilities of Asseco market position. Despite overall diminishing EBITDA margins and revenue growth, Asseco is able to maintain the highest values, whereas in EBIT, we observed a positive trend in which we expect Asseco will soon outperform market peers in upcoming years.
Now let's take a look at ESG performance. As for environmental, Asseco pursues long-term company growth while minimizing its environmental impact. The company is especially concerned about power consumption and recycling electrical and electronic equipment. Asseco is constantly improving its energy efficiency, which helps to reduce carbon emissions significantly. Another important aspect that fosters the environment is the digitalization of business. Asseco Poland is on its path to becoming a pioneer in the digital revolution, which is having an increasingly positive impact on society and environmental protection. In the social aspect of ESG, Asseco Poland delivers grants, donations, and sponsorships. During the pandemic, the Asseco launched assistance programs for COVID-19 and was constantly supporting people in need. Concerning governance, Asseco Poland's governance structure reflects the industry's top standards. It meets the most rigorous management and transparency requirements. The board of directors and management are highly experienced and come from various business backgrounds. This team, we believe, will provide the highest value for its stockholders. In terms of ESG, Asseco Poland constantly excels, resulting in long-term value of the company, although we consider the company's environmental performance is not sufficiently disclosed. In the coming years, increasing ESG disclosure will attract even more sustainable investors.
We projected the Asseco revenues to grow at around 9% CAGR over the next 6 years, as we believe enterprises will increasingly build new technologies and software rather than buy and implement them. So we do not expect significant increase in growth rates in the midterm. However, we expect long-term growth will be driven by increasing demand for the IT services and ongoing global digitalization. Formula System provides the biggest part of Asseco revenues, holding 62% of total sales, and is the fastest growing segment in terms of revenues at 17% CAGR. With the booming need for advanced technologies in financial services and IT solutions, we believe Asseco Poland will remain the local leaders in terms of revenues in the midterm. We also believe software as a service will remain the main long-term growth catalyst, driven by corporations' increased need for maintenance services. Global IT spending is projected to be around $5.6 trillion in 2026, and the enterprise software market is expected to the highest growth. In 2020, Asseco Poland outshined its peers with almost 2 times higher EPS, increasing the value by 40% year over year, and exceeding the Polish software and the Polish market returns with amount of 23% for shareholders' returns. Additionally, the return on capital employed is constantly increasing, and we expect Asseco will maintain upward trend at around 14% CAGR in the long run, reaching ROCE of around 21% in 2026. The group has healthy current ratio, which is 2 times lower than the peers average, showing efficiency in using its assets. We expect working capital ratio to continue the same trend and to stay under 2 points in the long run. When it comes to debt to equity ratio, Asseco indicates relatively low risk and future dividend solvency. Additionally, the group is improving the cash conversion ratio due to efficient working capital management and long-term relation policy. Asseco Group also outperformed its peers with a high positive staff turnover ratio. The employee turnover was plus 7% of average during the last 5 years, when the average peers group was -6. Despite the relatively rapid expansion, Asseco is able to maintain its high productive ratio above its peers. Additionally, one of the biggest subsidiaries, Formula Systems, reports that the major part of its sales come from existing customers, indicating that the staff is able and stable to build a long-term relationship with their customers.
The revenue growth of 9% CAGR will be driven by the increase in efficiency and production department, expansionary policy, growing digitalization, and current situation with COVID-19. Our calculations are based on 2 scenarios, where in the first one, we estimated the revenues by using the workforce capabilities of the company. In this scenario, we expect the efficiency and production department to increase by 4% and 3% respectively. In the second scenario, we evaluated each of 3 Asseco segments. We anticipate that the share of the revenues from formula systems will grow from 62% in 2020 to 69% in 2026. The overall increase in that scenario is calculated to reach 10% CAGR. In our forecast, we projected EBITDA margin to slowly decrease over time, as we expect the rise in employee benefits, which trend is in line with market consensus. We are convinced that this increase in the operational cost structure devoted to the workforce spending will convince employees to stay within the company, which additionally will support our sales. Moreover, in order to boost the growth rate, we believe Asseco will invest CapEx into acquisitions and goodwill. On average, in the next 6 years, we anticipate Asseco to spend around 8% of its revenues on capital expenditure. In our calculations, we estimated WACC at 6.45%, and in order to reflect Asseco's activity on 3 different stock exchanges, we revenue weighted the equity risk premium from those markets. Furthermore, the terminal growth rate was set at 2.73%, which was obtained based on the GDP growth rate in the last 20 years from the 6 most sales-heavy countries for Asseco. With all the above information, we estimated the target price of Asseco at 109.1 Polish zlotys, which represents an upside of 33%. In order to support our DCF, we also conducted relative valuation where we compared Asseco to 7 companies. Asseco is trading at a discount compared to its multiples of its peers. With this method, we used 3 EV multiples to observe the company's performance from various perspectives. The average of the results concluded with a target price of 109.9 Polish zlotys, which also represents an upside of 33%. Additionally, if we take into consideration Asseco's margins and growth while comparing it to the multiples presented, we believe Asseco is clearly undervalued.
As for the investment risks which may impact our buy recommendation, we identified 3 main groups of such: operational, market, and regulatory. According to our analysis, most of the risks are located in the low to medium probability and low to medium impact part of the matrix. However, there are 2 risks with high probability and high impact, which are related to the company's employees, who are actually the most valuable asset of Asseco. We believe that due to a constantly growing demand for Asseco's services, which gives the company a possibility to increase its prices and an overall strong brand and good reputation of the company, such risks will be mitigated. Another risk standing out by its high impact and medium probability is the instability of income due to the COVID-19 pandemic. However, due to an overall technological transformation, there is still room for new technological solutions, and the demand for them is predicted to be growing in the future, therefore putting Asseco in a promising position. To conclude, we uphold our buy recommendation due to Asseco's proficient workforce, broad M&A experience, and premium margins. Thank you, and we will now take your questions.
Thank you very much for your presentation. And now I open floor for questions and answers. So dear jury, floor is yours.
I can start. I would like to know, because you have shown us the risks, but can you elaborate a bit on challenges ahead of the company in these current circumstances?
So I can take that, yes. We estimated 3 challenges for upcoming years for Asseco. One is maintaining low staff turnover ratio, staff turnover rate on a low level. Another one is fulfilling increasing demand for ERP solutions. And also the third one is fulfilling a demand for cloud solutions. And in those 3 areas, Asseco presents superior performance as, for example, it is leading the company, the Asseco Business Solutions subsidiary is in Poland is leading in terms of providing ERP solutions. and companies' RP solutions are basically available in over 50 countries around the world. And on cloud computing, as I said during the presentation, even though that that the company does not present superior performance compared to its peers in terms of investing, it experienced a bigger annual shift compared to the peers. And as my colleague said also about staff turnover ratio, it is maintained on a low level, which is very positive for a company.
Okay.
And what about the management of the company? What's your assessment of the management policy?
So I can take that one. So the management board consists of 10 members, with 20% of them being women, and they are planning to raise the gender diversity among them. And the management board of Asseco is highly efficient, which is clearly divided into different streams and of their specializations, like vision and strategy of Asseco Capital Group, internal audit department, agricultural insurance division, financial division of Asseco Poland, legal office management. These are some of the key strengths and specialization of members in the management board. We could also clearly see that that the management board is performing in a very well way, which is clearly reflecting in the revenues, and also with vast and widespread mergers and acquisitions and increase in revenues.
And I want to add something at one, because I really like this on the federation model. It's something like that the management board are present in the management meetings in the other subsidiaries. So this is really nice to have the connection between this federation model and create those synergies to know what is going on through the whole sectors and segments globally.
Okay, thank you.
Okay, other questions, dear jury? No questions?
Sure, of course.
Piotr.
I didn't quite understand your reply on the management. So actually, I would have two questions regarding the management, because you mentioned that if I understood correctly, it's good that the management of the parent company is taking part in the board meetings in the subsidiary companies, or the other way around. So that's my question, and could you please say why this is good? Second, I can see that at least what you've heard, one of the biggest assets of company management is actually, as you are saying it, the number of women present at the board, without saying anything who they are. So if you could comment on that.
Yeah, so I will take the first one. Why it's good to have some such meeting, because it's create those synergies, like this cooperation, enable accumulation of corporate experience and know-how. And it's good to know the whole management board is going to our global subsidiaries. They know what are the locally trends are, and you can keep the strategy of all group together. You know we are on the same page, and I guess it's really good to have those connection and knowledge.
If I can add to that, I would say that the main advantage of such structure and this participation in the meeting is that the management board can better understand the needs of the company, the current challenges, and take advantage of, for example, current trends, and therefore overall better manage the whole company, the whole group, the whole federation.
And to add about the women present in the management board, so there's 10 people on the management board, namely Adam Gorau, Andrzej Dobierawa, and I'm going to name the women. It's Carolina Joshna. She takes care of the financial division of Asseco Poland, and Gabriela, who takes care of the legal office, management board office, human resource department, compliance and process management department, internal system maintenance and development department. These are the management board is widely spread, and they are given as per the specializations of these people, which is a key strength for the company.
Okay, thank you. You mentioned various risks for the company, both in your presentation and in your reply to Alexander's questions. But what's your attitude? How do you see risks and maybe opportunities regarding current situation in Ukraine and East in general?
Well, this will be definitely a risk for Asseco for now, because Polish zloty has recently depreciated, so there is a risk of further growth of the inflation rate and further changes in the interest rates, which could actually affect the company. Also, these factors can bring more instability to the Polish market, which has already undergone many structural changes due to the COVID-19 pandemic. Therefore, Asseco would have to constantly track them and stay flexible. However, on the other hand, Asseco's revenues are mainly earned in foreign currencies, which actually puts Asseco in a better position if the Polish zloty depreciates. Therefore, such risks will be somehow mitigated. And also, ruble and hryvnia are not in the top 10 currencies in which Asseco earns revenues, so the risk is mitigated, we believe.
In addition to that, as recently Mr. Visa said, that Asseco is now tested in the quantity of work they have because they support governmental infrastructure. So this is also additional risk for the company as how they will go through that period, how they will support all the infrastructure, and based on that, probably some decisions will be made if the government will continue the cooperation with Asseco.
Okay, other questions? Other questions? Not? No more questions, dear jury?
Yes, shortly, can you show us the link between DCF method and your effect of your valuation regard to the price, because I cannot see implicitly the effect of calculation, how it impact the price you presented in this presentation.
So maybe let's show our appendix on DCF model, where we, as we stated, we conducted 2 different scenarios to calculate Asseco price, and one is by calculation and prediction of the workforce of the company, which we stated that will be growing in the next years via acquisitions and basically people being more effective and bringing more money to the table.
1 minute left for questions.
And the second scenario, where we evaluated the performance of each Asseco segments, the growth rates, and the current acquisition plans, like recent acquisitions. We, based on that, built our model and future predictions that Asseco's revenues will be growing for the future. Then we tried to implement the complicated structure of the workforce spending into our model, as Asseco is based on the people and high-tech qualifications. So we expected also that there will be increase in revenue in the salary payments and employee benefits, because people basically will want to change the job for better paid jobs in some other companies. Then we go to the depreciation that we made.
Okay, thank you very much. That ends up our Q&A session. Team G, thank you very much. Please stop sharing screen, and please then leave the room, and we will ask now the team I.
Okay, thank you very much. Goodbye.
So Jakub will ask team I.
Thank you.
Thank you very much. Now we will see each other soon. Okay, I think that team I is coming to the room, it's entering the room. We have one person, second person, third, fourth. There are 5 of you, right?
Hello.
This is so I was 01, I 05, 4, 3, I 02. Okay. Okay, great. So please, share the screen just that we see your first slide. And then when you are ready, you just tell start and the time starts. There's 10 minutes, 1 minute warning before the end. And then there'll be 10 minutes for question and answers. So we see your first slide. If you are ready, you just say start and then we start.
Okay, so just before we start, can all team members please confirm that they are here?
Yeah. I see I03, I04, I01, I05, and I02. So 5
Yes.
people, right? Okay. Good.
Okay.
So
Then
can we
let me
start?
Yes, I think we can start in like 2 seconds. Okay, start.
Okay, start. Good.
Not all that glitters is gold, and not all IT companies are about growth. Asseco Poland is an international software house and service provider. Its core activities are in Central and Eastern Europe, Israel, and the US. It is specialized in financial software, public sector IT infrastructure, and enterprise software. We are here to present our sell recommendation for Asseco, with a target price of 72 PLN and a 10% downside at the valuation date. We support our investment thesis with 4 key reasons: Asseco's low growth prospects, expensive technology gap, mediocre ESG commitment, and dividend-driven valuation. Firstly, Asseco is a company in a booming sector, but because of its business model, products, and clients, we don't see much room for growth. Secondly, part of the product portfolio is aging. Closing the technology gap will require investments. Salary costs for IT specialists in high demand could make it difficult for Asseco to keep up with international peers. New products could be sourced through M&A, but it is not creating enough synergies and is overpaying in a hot IT market. Thirdly, money in the financial markets is flowing towards sustainable investments, and Asseco is taking a contrarian approach with ESG reporting at the bare minimum, especially compared to WIG20 peers. Increasing ESG investing popularity could further reduce institutional demand for Asseco's shares in the next 1 to 2 years. Lastly, the company benefited from the rally in IT stocks that was sparked by the pandemic. We see the market is already returning closer to fundamental-based valuations. For Asseco, that would mean dropping back to multiples driven more by dividends than growth expectations.
On low growth prospects, the growth of the IT software and services sector is forecasted to exceed 11% compound annual growth rate until 2025. However, we believe that while prospects for the IT sector are good, Asseco is not well positioned to fully benefit from it. Asseco is underexposed to fast-growing sectors like cloud, SaaS, cybersecurity, and AI, which make up just over 6% of its revenues and are the key growth drivers in the market forecast. The most important products like DEF 3000 core banking solution are old and struggle to compete against modern solutions. They stayed relevant in finance back office and public sectors for reliability, but this is not going to drive future growth. The company's client base is also not forecasted to drive consistent growth. Small cooperative banks are Asseco's primary banking clients. The public sector presence is only significant in Central and Eastern Europe and Israel. Moreover, Asseco's key contracts, such as Polish public insurance provider, ZUS, are not for replicable software, but for ad hoc solutions. On expanding technology gap, the company's aging products portfolio requires investment to close the technology gaps into international peers, organically or through merger and acquisitions. Should the company choose organic development, it would need increases in headcount that would negatively impact operating margins because of rising salary pressure caused by demand for IT specialists. We don't see this reflect in the consensus EBIT forecast, which is 2 percentage points higher than our 2.4% 4-year compound annual growth rate forecast. Alternatively, choosing the acquisitions route would mean buying companies to obtain new products and know-how. This is not in line with Asseco's current and historical merger and acquisitions policy, which has been more about empire building than about synergies or acquisitions of new ideas. While it has been involved in over 100 transactions from 2004, negligible intercompany eliminations such as internal synergies are limited, both for cross-selling and knowledge transfer. Additionally, large goodwill recognition signals the company is overpaying for acquisitions in the overheated IT sector. Goodwill amounted to 65% of acquisitions costs in 2020.
Financial analysis reveals Asseco's large share of intangibles, declining profitability, and excessive role of management judgment in consolidation. Firstly, the empire building M&A strategy has led to negative tangible equity, thanks to large portion of goodwill, which also has indefinite life and is not amortized. While Asseco's ratio of intangibles to total assets is 47%, the peer median is 29%. Secondly, the company return on equity of 9% falls short of 10% of cost of equity, and return on invested capital is also lower than WACC, which signals the company is short of value-creating projects. Moreover, a gradual decrease in gross margins has not spilled over the net margins because of low capital expenditures and capital investments, driving low depreciation and amortization. We expect a negative effect on profitability once investments increases. Lastly, Asseco artificially inflates assets and revenues. Asseco fully consolidates subsidiaries in which only owns just above 10% of shares, which is compliant with IFRS, but this does not represent the true financial state of the company and relies highly on management judgment. The prime examples is Asseco agreement with the CEO of its subsidiary, Formula Systems. The group allows him to vote in his place, despite only 26% of the company. This agreement can be revoked annually. Moreover, consolidation into PLN exposes Asseco to foreign currency risks. The decrease in PLN value in the last 3 years exaggerated, and the growth rates of the Israeli segments are expected to be lower. A reversal could decrease that.
So regarding the ESG, the company only scores 55 points out of 100 in the Refinitiv ESG index. However, using SSAB's materiality map, a considerably bleaker ESG picture emerges with 3 out of 6 material areas presenting financially impactful risks. Asseco's heavily fragmented ESG policies do not allow to establish satisfactory group-wide actionable targets. We expect this issue to have a direct negative impact on share demand and with an increasing role of sustainable institutional investment. Environmentally, Asseco scores poorly in reporting at the group level, especially regarding the lack of climate policy and of environmental impact policy. Furthermore, the absence of central energy policy leaves the company exposed to fluctuating energy prices and investors uninformed about energy consumption level and the sources of this energy being used. Socially, there are warning signs that human capital, customer privacy, and armament involvement. Asseco ranks also significantly lower than international peers and marginally lower than its main Polish competitor Comarch with respect to employee ratings. Combined with the rising demands in the IT specialists, this could result in a risk for retaining and sourcing employees. In terms of governance, we highlight anti-competitive behavior and takeover risks. Firstly, Asseco's competitive behavior is under scrutiny as it faces an investigation for abuse of its competitive position. Secondly, there is a risk from takeover from Cyfrowy Polsat, which has a history of acquisition by means of tender offers. It currently owns 23% of Asseco shares, and in this case, of occurrence of such tender offer, the premium offered to investors is unlikely to offer a significant upside.
Return of fundamentals pushes the stock into dividend-driven multiples. We obtain a price target of 72 PLN through a weighted average results of sum of the parts model, the dividend discount model, and relative valuation model. The large presence of fully consolidated minority stake shareholding, where Asseco owns only minority stake, is a main factor behind the choice of sum of the parts model as our main target price driver, and has been given a weight of 60%. Publicly traded subsidiaries were valued using discounted cash flow model, and private ones are valued through EV to EBIT multiple. The sum of the parts is reduced by a holding discount of 15% as complex group structure warrants a holding discounts because investors tend to achieve diversification within their portfolios. With a dividend yield of over 4%, Asseco is primarily a dividend stock, and hence we reinforce our target price with the use of dividend discount model, which acts as a floor price for Asseco valuation. We forecast an average growth rate in the dividend per share at 3.5% for explicit period and 2.5% for terminal growth. Lastly, we only give 5% weightage to relative valuation because of the uniqueness of the group structure, justifying its large discounts against its peers on various multiples. We see that investors are valuing Asseco closer to dividend multiples than a high growth IT multiples. As such, the target price derived from relative valuation using IT peers would be vastly overblown.
In conclusion, we issue a sell recommendation for Asseco Poland on account of low growth prospects, an expensive technology gap, mediocre ESG commitment, and a return to a price driven by dividends. Thank you for your attention.
Thank you very much for your presentation. And now I open floor for the question and answers, 10 minutes. So dear jury, floor is yours.
Okay, I may start again. You have mentioned the ESG rating. How was the rating created? Was it created by you or by someone else? What were the assumptions?
With regards to our ESG rating, I think you mentioned you are asking about this 55 points, sorry, it's mainly from the Refinitiv database, which is like the official source. So we based ourselves mostly on the rating.
On the next slide, there was also a kind of a rating on I think, and no, on the next one. Sorry.
Yes, I can comment about this one. This is coming from GoWork PL. It's a Polish employee opinion gathering company, and it's publicly available data about employee ratings.
Okay, and one more question, at least from my side for now, is you have mentioned at the very beginning that there is an urgent capital, there are some urgent capital expenditures, and there is a gap to international players. Can you elaborate on this?
Yes, so I think the key element of the gap is about investment in high growth areas. So those that are forecast to drive the market into future growth in the coming years. And those would be cloud, so data centers investments, AI, so specialized workforce and researchers, and software as a service does not require investment in itself, but to maintain software as a service and to provide it to clients, you need to have the infrastructure to do so. And it is also further investment into servers and computing capacity.
Okay, if I may, you mentioned, and it seems that it's one of your strong points, that a poor ESG or your evaluation as companies ESG being poor negatively influence the company and its valuations. Could you please say a word on that? I'm especially interested on how the issues connected with ESG interfere, how they influence companies' results and companies' valuations.
So mainly we see here the issue that there will be an outflow of an investors who would be like concerned about the ESG and it's like reporting within the company. So that would mean the outflow that these investors would be reliant to, purchase the shares of this company, therefore causing a financial, strain on the firm. Also, we think that maybe in the future, like as regulators are progressively interested in it, and then when it comes to recommendation of such company, Assecos will be also less visible to investor, thus driving further outflow of purchases of its shares.
Yes, just to add to that, reduced investment demand for Asseco shares could also impact its cost of capital through so we could see an increase in that sense as well, but this is not part of our explicit forecast period. We just raise it as a risk.
Okay, how can it happen? How can worse ESG rating directly influence cost of capital, especially debt?
Well, so I would argue that the first thing that would happen as a consequence of reduced demand would be an increase in volatility, and volatility would influence the beta of the company against the market index. So that's how we could see it spilling over to cost of capital.
Okay, I understand. So no direct influence on the company's revenues, profits, and so on, but indirect through lowering the demand on companies' equities on stock exchange. Did I get it correctly?
Yes, that's correct.
Okay, thank you very much.
Any more questions?
Yes, sure. Sure.
Okay.
Your relating to your valuations, your peer part of valuation has a very, very low weight. I guess it's only 15%. No, it's actually 5%. Sorry. Why is that so low, especially taking into consideration that probably, at least seeing the price to equity ratio you mentioned, it's significantly higher than the company's private equity P&E valuation, which would probably mean that if you went for more weight of the relative valuation, the valuation in total would be actually higher.
Yeah, so we have given only 5% relative valuation because when we are looking at a company at consolidation, it has consolidated various minority stakes at 100%. So giving its EBIT and other multi-EBITDA at it's not showing the true pictures of the EBIT. Just to give you a picture, like a formula system, which Asseco owns around 10%, its stake in the revenue is around 64%, and EBIT of formula system is around 50% reflected in the Asseco's EBIT. So
just to add to that, there is also a distinction between P2E and EV to EBITDA. So what Siddharth is describing is the negative effect on EV to EBITDA, but as the result of the consolidation, but P2E is not impacted by that, but rather a lot of the discount comes from the group complexity. So this is why investors are discounting it much lower than the comparable peers, because the group complexity means that a diversified investor sees it exclusively as a risk without any additional returns, since they achieve diversification within their own portfolios.
Okay, you can make corrections considering it, but anyway, what's your opinion about company management? How would you rate them?
So I think the management board is quite long-standing and fairly stable. However, we see a risk in terms of the diversity and the siloing a bit of this management board, as all of the board members are Polish, and gender diversity in the board is quite low, especially compared to international peers. But even
how does it influence the quality of the management and the managing of the company then?
I would say that the key factor is the localized aspect of the board. So all of the board members being Polish, while the company is operating, or at least attempting to operate, in a global market. So I think that bringing further origin diversity into the group could help bring a more global perspective to the management board.
Got it. Thank you.
Thank you very much. Any other questions, dear jury? No question. Oh,
question. No.
No. Okay. So thank you very much, team. Please now stop sharing the screen. Thank you for your efforts, and then you have to leave the room for a short while. And the last team that will be presenting is Team D. Team D. So I ask Jakub to allow Team D to join us, and Team I, please now leave the room. Right.
Thank you.
We'll meet after the last team.
Thank you.
The results. Thank you very much again. Thank you. Thank you. So we are looking now, we are waiting for team D.
Okay, thank you so much. Bye.
Oh, that is team D. Oh, you are all together, right?
Yes. Yes.
Okay, so just whole team is here. Great, great. So welcome to this final presentation. And please start sharing the screen so that we see your first slide. Okay, and when, okay, so we see, right, we see a screen and your slide, first slide, and then there's 10 minutes. When you say start, we will start to count 10 minutes, 1 minute warning before the end of the 10-minute presentation, and then 10 minutes for Q&A.
Okay,
so
but you can see our screen.
Yeah, I can see your screen. I believe that everybody else is seeing this.
Okay, are we all ready? Yes.
Yeah, are you ready? When you say start, the time counts.
Okay, okay, start.
Okay, good.
Hello, everyone. We're Team D, and we're going to present to you our presentation of Asseco. We issue a buy recommendation of Asseco with 3 possible scenarios of intrinsic value.
And I will show you the overview of business segments and revenues. So Asseco is a federation of companies that engage in information technology and they specialize in the production and development of software. So Asseco divides its operation into 3 main segments. The Asseco Poland segment will include the operation of the parent company and the companies that operate in the Polish market. The second segment is Formula System, which accounts for the significant...
Excuse me, can you go to the next slides maybe, because if you are presenting next slides, we can see only the first one.
What?
We only see the first slide. Okay, now we see the third one, and here's the second one. Yeah.
Thank you.
And if you press F5, I think it also would be more visible.
Can you see business segments? Hello?
Yes, we see a second slide. We now see second slide.
Yes.
But we're on the third slide. Something is kind of going wrong.
Now it's got.
We got the third one.
Can we continue like this? Because I think we're having some technical difficulties with the slide. Okay, we apologize for this.
Yes, we apologize for this. So now we are at the business segment, and I have introduced the Asseco Poland segment, which includes the parent company and the companies that only operate in the Polish market. And the second segment is Formula System, which account for the significant portion of Asseco revenues in 2020. And Asseco products can be divided into 4 main types or categories: is proprietary software and services, third-party software and services, hardware and infrastructure, and other segments. And we can say that their primary source of operating income comes from primary software and services, which accounts for around 79% of their 2020 revenue. And the group has clients who fall into 3 main business sector, which is business, banking and finance, general business, and public institutions. And we can also see that their revenue is relatively equally distributed among these 3 industries. And so we conclude that Asseco is a company on the growth with a solid business segment, diversified products, a wide range of customer, and a good prospect for the future.
Now I will present ESG. So we collect the data from Refinitiv and the reports which were presented by Asseco. Asseco previously having less than ideal ESG scoring, but Asseco had improvement in their ESG scoring over the last 5 years, and we believe that it will continue in future. Energy efficiency, staff transportation, and wastage reduction are the positive parameters of environmental side. About the social side, Asseco is employee diversified organization with 33% of proportion with women which is quite well according to the Polish market, I believe. And for the governance side, 50% share proportion is for the other shareholders, with around 23% is for Cyfrowa Polsat, which is #1 telecommunication company in the Polish market.
Thank you. I'll now present the financial analysis of Asseco. We gathered our data with the help of Refinitiv, and we double-checked the data with the financial report to further strengthen our views and claims. With our finding, we can conclude that Asseco is in a very good financial position. Their sales revenue has been increasing over the last few years with a logarithmic increase of 8.5%. And COVID-19 has not impacted their ability to generate sales. And to put this in perspective, if we use the rule of 72, we can see it'll take roughly 8 years for Asseco to double their sales. But perhaps what's more important is the free cash flow of the company. And free cash flow represents the cash ability for a company to repay creditors and pay out dividends and interest to investors, which is basically the real profit of a company. And Asseco uses the IFRS measure of free cash flow by taking income from operating activities less than capital expenditure. From our observation, not only does Asseco have a high level of free cash flow, but is increasing by 25% annually. The liquidity level is very good and in ideal range, meaning that they're able to meet their current obligation and have money left over. Asseco's dividend policy is also very appealing. In fact, many would consider Asseco to be a passive income investment. Their company's dividend payout ratio is very healthy, roughly about 50%. So investors receive a dividend, but they don't really have to worry either about Asseco paying too much on dividends, which they will have to cut back in the future. Thank you.
Well, I will now present what is perhaps the most important part of our research, and that is the evaluation method we use. The first one and the one we depend on for our evaluation is the discount cash flow model. For this, we have used a discount cash flow model for a 5-year horizon with data from Refinitiv and their financial reports. We assume that the terminal growth rate will be 5% in the future. With our calculation, the Asseco intrinsic value will be between 215 zloty and 253. However, we cannot simply use DCF as our only model to evaluate the company, because it is important to compare with their competitors. So that's why we have used a multiple valuation method with ratio, which we believe that is crucial when you are analyzing a company. Our multiple valuation model shows us that Asseco is relatively undervalued compared with their competitors. Lastly, we have used a Monte Carlo simulation, which helps us to see the different price between the all year 2022, as you can see in the first graph, and at the end of the year 2022, as you can see in the second graph. The probability of the price of Asseco during 2022 is greater than 82, is around 64%. The maximum and minimum price Asseco may ascend as to is high at 379 zloty and low as 21. We created our Monte Carlo simulation using historical data from 2016 to 2021 from Refinitiv platform. So with all these three models, we can say that we give a recommendation of Asseco.
So our conclusion is that depending on investors' needs and risk tolerance and goals, investors should on Asseco, because Asseco has a strong financial position. Their stock price is below intrinsic value, and the company has a solid business segment, and therefore we issue a buy recommendation. Thank you for listening to our presentation.
Thank you.
Thank you.
Thank you. Thank you very much for your presentation. And now I open floor for the questions and answers. So, dear jury, the floor is yours.
Maybe I can start. So maybe for the very beginning, regarding the first question regarding the price, which is huge.
Sorry, I can't hear you. It was too much background noise. I apologize.
I'm sorry, somebody has the microphone on. Is it?
Okay, is it better now?
Yes.
Yes.
Okay, great. So the first questions from my side would be to your recommendation and very optimistic valuation. Even in the pessimistic scenario, the price is much above the current value, the market value. So what is the reason and why is the pessimistic scenario so optimistic? Maybe that's the first question.
Well, we believe Asseco's business segment industry will have a rapid growth in the future because the products and service business Asseco has is very important to their customers. And we believe that in the current state, there will be a big demand for Asseco's goods and services. So we have a high growth rate for the company because we believe this industry is going to grow rapidly in the future.
And what would be the value? What's the drivers of the future growth in such a case?
Should I answer that? Okay. Well, we believe that the customers Asseco has are in need for their services, such as the cloud services, their internet services, their what's it called? Their
public institutions.
The public institutions that they need to update their cloud services and data services so it's protected and stored, which is currently has been a problem in the recent years when companies realize they have so much data that they don't have nowhere to put it and it kind of blocks up the servers. And we believe, especially for the banking and public institutions, there can be a high demand for this.
So what is the reason that the price is so low right now? The market price.
Well, to be honest, the current state of the market is not really good. There has been many things that has been pushing down global stock prices. And we think that unfortunately Asseco is in the crossfires and the casualties of this. But we believe that in the future, this is going to change.
Okay, last question from my side. What are the risks and challenges for the company for the future?
Yes, so first of all, like as we mentioned in our report, the biggest risk for Asseco now will be the cost of labor, because labor, like the IT specialist, plays an important role in this industry. Like we need the people's knowledge and skill. And given the current situations where I suppose that many people will go into this industry, and the company's responsibility for now is that they have to filter out the individual that have the right specialties, and that the company also have to cover the appropriate amount of salary given to such individual. So that is the biggest risk that we consider. And the second risk, which we suppose is most important, will be also the problems of copyright. Because Asseco specialize more, their primary source of income is the proprietary product and services, which is tailor-made. Yes?
Hello?
Hello?
Go on.
Go ahead, go ahead.
Okay, so their product is really tailor-made and specialized for each company in each individual sectors of the economy. So that's why the most important part here is the copyright and the changes that they have to make to adapt to certain economy, such like that. Yes.
Okay, thank you.
If I may, you told a bit about the valuation, but if you could say a few words on how do you evaluate their business model? How do you evaluate their strategy? Whether you see it as an advantage or not? That's my first question. My second question would be about the risks regarding current geopolitical situation on the east.
If we answer the advantages, I can answer the second question.
Yes. So for now, Asseco Group has the strategy like they will focus on two main points. First is that their organic growth will be specialized in the diversification of products. And the second will be that they will focus on the acquisitions of other companies, like to grow their revenue and their results more. So what we found advantages here is that they are currently like opening their operations like in many sectors. So it also means that the specific risk of a certain sectors will not have much of like not like a very bad on Asseco products. So you can say that their risk for in terms of business sectors is more diversified. So that is a good thing about it. And in terms of acquisitions, so as we know, Asseco Group is a big group, and they like grow through acquisition of other companies. And you can see that their share is like very diverse, and it has many layers or many stages, I would say.
Yes.
Yes.
For the second question, could you please repeat it so I can understand it correctly? What is the...
Sure, of course. My second question was how do you see the risks for the company, or maybe the advantages connected with current situation in Ukraine and Eastern Europe in general?
Well, we discussed this, and this is what we kind of meant before, that why we believe Asseco's products is so needed. Because Asseco does servers and cloud services for institutions and banks. And currently, I don't want to name a country, but there has been cyber attacks towards Ukraine's financial services, banking service, and public institutions. And I think of what has happened in the recent few weeks might give institutions around the world, banks, a wake-up call that they need to improve and update and have a backup plan. So we can see this as an advantage. As of risk, hopefully, and I hope this, that nothing of the situation escalates and everything goes back to normal or de-escalates. But as of right now, we don't see any current risk directed towards Asseco or Poland that would affect our investment decisions.
Thank you.
So maybe one question about the DCF analysis. If did you somehow included in this analysis non-controlling interest, or this is based purely on the data from consolidated financial statement without deducting non-controlling interest and impact of it on the valuation?
Your connection was a little bit choppy. Can you please repeat the question? Okay. We apologize.
Yeah. In your DCF analysis, did you use the data from consolidated financial statement of Asseco, and did you, to some extent, deducted non-controlling interests, which in other companies, which Asseco has, because Asseco does not have 100% of interest in some companies in the group. So did you include it in your analysis, or did you do the analysis on the whole level, looking at on the whole operating profits and all the revenues and so on?
And 1 minute
technical.
left.
Okay.
Yes, we did.
Yes, we looked at Asseco's consolidated income statement and we read the report. We also, like we said earlier, we used Refinitiv to back up or to see which claim or which data was accurate. But we mainly, for this, the DCF model, we mainly used their consolidated financial statements.
Yeah.
Now, in regards to non-controlling interest, would you like to answer that? Well, we did not, when it came to the DCF model, we did not deduct minority interest from enterprise value. And that was mainly because, to be very honest, it was a mistake, not a lack of knowledge, but just a simple calculation mistake. But when we did include it after the feedback, we saw that the price.
10 minutes.
Pardon?
10 minutes of questions. Thank you.
I think we are now running out of time for the question and answer. So dear Team D, thank you very much. And you have to, well, you didn't share screen anymore, I think, so you don't need to stop sharing screen. And thank you very much. You have to leave. And also I would like other guests who are in the room now to leave for a while, 20 minutes or something like this, until 5:30, maybe 5:35, because I want to stay here with jury members. And so we will be here. And maybe Jakub will take care of it. Jury was potential investor. They ask you difficult questions, and I think you managed this. So the quality was very good. So the winning team, I will announce who is the winning team, but the winning team will go for the regional, for the sub-regional finals, right? So this will be based on the recording, and then the best team will be, well, not maybe the best, but several best teams from the region will be selected. And then what counts, unfortunately, because that was not the case years ago, unfortunately now only onwards from now, presentation will count, right? Before it was such a situation that also report counted to some extent and presentation, but then I think the CFA Institute changed these rules, and now also partially because of pandemic, I think, right? So my big congratulations, again, my great congratulations to you. You performed very well. My big thanks goes to graders also. I see there are some graders, there's Małgorzata in the room, and Rafa is in the room, and maybe some other people. I can't see maybe everybody. Thank you for grading. I know that it was, you know, huge effort because you have to do it in relatively short time, in 1 week or so, just to announce the teams who are going to the final. And these are these great 5 teams. So basically it. Of course, after this, you will be contacted. First of all, we will give feedback to all teams from the presentation. That's what we have, at least points from different parts, without giving, of course, the names of jury, etc., etc. And then, of course, we will contact also teams who are, especially winning team, what you should do next. We have to report this immediately winning team to CFA Institute. And that's it. So now, if you want to know the results, just let me know. If not, so yeah, we're going to close the presentation, but I hope that you want to get results. So as usually, I give you results from the, you know, from the down, let's say, but you're all winners. But of course, please remember that the points are based 50% on the grading of report, 50% from the presentation. We of course adjusted because there were 7 graders. So we have to adjust this to have the scale of 5, like very often there were 5 graders, and the same is here. We had 3 jury members, so we have to adjust this for the 5, like 5 members. So we multiply or divide with respective coefficients. That's it. Now, the team who is in the 5th place, congratulations. This is Team D. Team D is on the 5th place, and the team is from Poznań University of Economics and Business. Congratulations. Congratulations to getting to final, and you know, and the great competition. So, and good luck. Team who is in the 4th place, this is the Team F, and Team F is from ISM University of Management from Vilnius, Lithuania. Thank you very much for joining us. And I mean, there is already tradition that the teams from Lithuania and sometimes also from Latvia are joining our competition. So congratulations. You know, I know that we are in touch, have been in touch for many years. Now, the team, the third place, this is also winning team with some prize, of course. The team who entered the third place is the team A from Warsaw School of Economics. Congratulations, team A, for your achievement, and there's money prize, etc., etc. And now finally, there are two teams who are in the second and the first place. I should tell you that these two teams are from the same university. So, you know, this was very tough competition, and the distance between each team in this fifth teams is, well, especially the two places, is not very large. But there's one winner and one second place, runner-up, let's say. Both teams are from the Kosminski University. I will tell who is the winner in a moment. So congratulations, and my congratulations goes also to the faculty and then mentors of all teams, but especially of Kosminski, for such good two teams that perform very well on the report and perform very well also on the presentation. Now, finally, what's the final result? Who is on the second and who is on the first place? Team I is on the second place and team G is on the first place. So congratulations. Congratulations for your achievements. And then I guess, just a moment. No, I think it's it. So congratulations, and you know, good luck. And I hope that all experience that you get through this competition, it will pay off, definitely. And this is, you know, this was 13th edition. And according to what I know from the previous edition, the students who participated, not even who won, but who participated, they said that was a great. Of course, we had to spend a lot of time in preparing the report and then for preparing also presentation. But it paid. It paid. It will pay in your job. It will pay in your studies also, hopefully, some experience. And I think this is basically it from my side. Okay. Congratulations again, and my great thanks goes to everybody who was involved. Asseco, maybe Asseco also will have some experience from this competition, and I'm grateful to Asseco that participated so actively during kickoff and before students present a report, and now today. It's extremely well. Thank you very much, and good luck.
It was our pleasure. Thank you.
Thank you very much, and I hope that you will join all events. Well, there are a lot of events still online, but we expect that we might have also very, very soon. Last year, we have one offline event, which was annual conference of CFA Society Poland with the participation of Aswad Damodaran, for example. You might know Aswad Damodaran if you write about valuation. I mean, I'm sure you're using his website with some numbers because he is famous for this. So welcome to these events and good luck. Thank you very much.
Thank you very much. Good job, guys.
Yeah.
Thank you.
Take care. Thank you.
Bye-bye.
Thank you. Bye.
Thank you. Bye.
Thank you.